This up into two conversations. You got user growth, you got revenue. So Jitendra, let's start with you. How good were the daily and monthly active user numbers?
Well, the stabilization that they have sort of shown in user growth is consistent this quarter. What's interesting is obviously the revenue expectations were pretty low for them. It was expected to be down 14%. They came better than that. But if you look at the U.S. ad growth, it was down 17%. So we are still we're seeing stabilization as user growth. There is sort of accelerated growth in daily active users. But in terms of understanding whether the advertising landscape is changing for them, especially here in the U.S., we still have to dig deeper into the call.
And Dina, this is sort of the divergence between the good and the bad in some ways, right? You get those daily and monthly active users rising, but as Jitendra pointed out, ad revenue down 11%. Overall revenue beat, but it was still down 8% year on year. Put these numbers into perspective for us.
I mean, bottom line is, Twitter could have done a lot more with Twitter, right? So they have two aces up their sleeves. One is live streaming, one is video. Now, we know in this quarter, live streaming actually did remarkably well. But it's also true that they could actually done a lot better. One of the reasons they're not doing that well is many key influencers are actually leaving Twitter and moving into Instagram, okay? And especially with entertainment, sports, and music, which were actually the three strengths in live streaming. So it's a bit of a pull and a push, right? So they're doing well, but at the same time, some of the content creators are actually moving out and moving into Instagram.
And part of that's going to be money, right? Twitter's going to have to pay up, but there's some companies with some serious deep pockets. Does Twitter have the revenue and the money to be able to get the content back?
I mean, I think they have the money. The question is, if you're a content creator, are you better off having your content on Twitter or on some of the other platforms where consumers are in fact moving to and spending more time on? So, one of the issues with these metrics is it doesn't fully capture, how much time people are spending. It might be just, you just log in once and you're a daily active user. It's not measuring, are you active based on, 30 minutes of Twitter time or an hour and so on. So, one has to dig deeper, like the analyst before said, to really investigate these issues.
So, Jitendra, it's clear that the key they've decided is streaming and video is what they're going to have. Do they have the right product and just can't monetize it, or do they have the wrong product in order to get the growth they really need?
Yeah, if you look at the product differentiation over here with respect to live video, I mean, there's not a lot. Like, Facebook has added a lot of features now. And also, live video is in its early earnings. And if you actually look at what's happening with YouTube and the measurement concerns in digital advertising, those issues are going to weigh on the industry as a whole, and especially with respect to video. So that's something to watch out for in terms of how it could impact their ability to, make that video drive the revenue growth going forward.
Jitendra, in the minds of many people, the problems lie with management. What's your view on that?
Right now, the main goal is talent management. I mean, there has been talent retention issues. If they are able to sort of, the cost management they have done so far, if they're able to translate that to now holding the talent that they have while steadily growing the user growth and, more importantly, making sure the advertisers in the U.S. remain on the platform throughout the end of the year, there's some hope here.
Some hope, but what struck me is that if you look at their second quarter EBITDA estimates, it's $95 million to $115 million. That was below estimates. So, Anindra, what is the biggest risk over the next 3 months versus a medium, longer term outlook?
I was actually expecting, like some of the analysts, that they would actually first ever year-to-year revenue decline. That didn't happen. If this didn't happen.
It did on a revenue basis overall, down 8% year on year. International, though, was up 2%. It was the U.S. that really posed the problem.
Right. I was going to, basically, my thinking was this is going to trigger conversation about a sale and acquisition. You might recall last year, we talked about Google and Microsoft and Salesforce and Walt Disney and so on. Now that the numbers are looking healthier, not terrific, but healthier, it's going to trigger a conversation about, is there a potential acquisition in the mix here?
I can't think of a single company, if we had a ratio, a company, how much is talked about relative to what it actually returns to shareholders. Yeah. This must be one of the worst ones out there. Well, we talk about this company every day.
Because the expectations were so huge and they've come down so much. I mean, the expectations were it was going to be another Facebook or something. Is it too late for them to remain independent? It's too late, in your opinion.
Well, I was going to say, say it's too late to become a Facebook, but we've seen these sort of debacles before. GoPro went through the same process before. Fitbit went through the same process before. But moving back to social networks, I'm not going to write off Twitter. I mean, Twitter has a unique value proposition, right? There is something powerful in those 140 characters that makes people communicate. It's limited by its demographic size and scale because there's only a certain kind of demographic. And so it's not going to be another Instagram or a Snapchat or a WhatsApp or even a Messenger. All of these are going to be always bigger than them. But they have that 300 to 400 million user base, which is going to be around for a while now.
Jitendra, there is a news feed in the president's Twitter account, and they can't monetize it. That's a massive problem. I go back to the management question once again. If they can't monetize that, then something's going seriously wrong, isn't it?
That's the thing with Twitter. They had a lot of organic eyeballs increasing in the second half of last year. And, with all the news flow that's going around, I think, and at the back of that, you see 17% drop in the U.S. Ad revenues. So, there's obviously it's clear that they're not able to monetize this organic eyeballs that are there in terms of product. But again, we have to really understand what is the strategy to sort of retain those advertisers, because so far that strategy is not really clear.